Welcome back to another Trading Fibs video. Today we're just going to pick up a little bit where we left off last week on this turn for the SPY. It's the S&P 500 ETF. We're just going to look at a couple things here on this chart and the micro E-minis and just make it a pretty short video today. So what I put out there on Friday was we needed to take a close look at this move back in 2022, the top, which was January, somewhere around January in 2022, from the bottom in April of 2020. This gave us our three moves, an A and a B and a C up, and notice on this purple line up here, which is the 161.8% fib, we were running into it. So we needed to take in consideration that are we going to hold at the 161.8 or are we going to break through? That being said, if we do break through, the 200% target then would be around the 742, 741 range. I've already marked that out too. That was last week. So again, this is the weekly time frame, so each candlestick is a week. We're going to zoom in here on the 161.8 fib and look where it's landed. Now obviously this week has just started, so last week this candlestick didn't exist, so we were just focused on the this passing move on this green candlestick. So you have, on the weekly, you just really had two candlesticks to start the move based on this low here, 728, 25. So from here, let's zoom down to the daily time frame, see if we can track this move. All right, so on August 12th is when we had our breakthrough on the 161.8 fib. All right, and then the next day we kind of had some indecisiveness on the price action. This left us with a doji candlestick. This is quite bearish candlestick too. So the next day we actually had to move higher. But if you notice, well, not really move higher, but it was a gap down and then closed where it was indecisive on the previous day. So technically it's not really bullish. It's still an indecisive move, these two sticks. All right, even the day after, it was higher than the close previously, but still we opened up at the max on August 13th. So you can see that, right? This wick here is the same as this opening of this candlestick here on the 15th. And then pretty much closed with a more decisive move lower, closing at 643, well below the well, not well below, but it was below 644, kind of the indecisive moves the previous couple of days. So that pretty much set the tone then that we were going to go ahead and probably break this 161.8 fib, which is what happened. Now, the fact that it was about 3 or 4 days above the 161.8 tells me it might have just been a corrective move on this leg starting at August 1st. So we're just going to see what this corrective move gave us. And I had drawn out a move on Friday. So Friday was, let me look here real quick. Yeah, Friday was the 15th. Is that right? $13, $14, $15. So this candlestick was here on the 15th. Okay. So I had drawn out that maybe we would get a retracement to the 50 or the 61, so I guess I split the difference. You can see that today we got the retracement all the way to the 50 with a nice bounce up. It got it pretty much. This is a rejection. This wick here is a rejection off the 50%. So this tells me we're probably gonna be looking to go higher to that 200% fib here at 741. Okay, so this is the S&P 500 SPY ETF. So this is what we're looking at right now. This is what we have to go by. We got the rejection off the 50%. Doesn't mean it can't go lower, but as far as what's given the information at this time, it's looking like it was just a correction off this previous A leg. So now we're going to go ahead and assume that this is an A. And I believe we're going to go ahead and say this is a minute degree. And I have these labeled in green. This is our B down here at the 50%. And our C is what we need to find. Alright, so let's get rid of the retracement. Let's get ready for the extension. We're just going to take the top of A, bottom of A, and everything up here are our targets we're trying to reach. Let's see if our 200 overlaps with any of the fibs. No, not yet. Okay, I'm pretty sure. That's why I said this is going to be a minute move. And that's why I labeled it green. I think this is going to give us a bigger A and then a bigger B, and then we're going to push it higher. So a couple more corrections. All right, so don't chase this. I don't think it's necessary. So yeah, judging by this candlestick right now, our first target's going to be 652. Let's move to the micro E-minis real quick. Zoom out. This is on the daily time frame still. Let's just go over the counts real quick. This one here in oval, the oval highlight, was our initial A and B, and I said somewhere up in the month of May that this is just some type of extension C leg, and I didn't know if it was going to be just the A that got extended or the C, but it looks like both of them are getting extended. And it looks like the C is getting extended of 2 degrees, by 2 degrees, where the A was extended by just 1 degree lower. Okay, so you're going to see here A, B, and C in white, which gives us our extension A, and then we have our pullback B, and now I think we're going to have 2 degrees here for C. I'm going by what I'm reading on the SPY chart just a second ago, so yeah, I'm thinking we're going to get an A, B, and a C up. That could complete, but I think we're going to get at least another degree out of this here. So is what I wanted to show you is that is why this C is looking a little bit more extended, because the B gave us a triangle here, so it kind of gave us a little bit longer time duration for our move higher here. So again, I have to emphasize, when this is complete, we will retrace all of this. Okay, we haven't got that retracement signal yet, but I could be wrong as far as the C leg being extended more, but like I said, we'd have to break this again, this is the micro E-minis. We'd have to break the 6241 area, 6240 level, for some type of confirmation. Again, remember that this move here on the SPY we measured, we had the 50% pullback. Okay, so that kind of told us that we're just really retracing this one leg. So I'm going to go ahead and I'm going to move these C's up higher. So the white is our lower degree, the yellow is the bigger degree, and this blue is the next biggest degree. So and then the green is the smallest out of all four of them. So we're going to go ahead and say that this is going to be an A here, B, and we're looking for another C. So this extended the C even more. Okay. So again, like we did on the SPY, we're going to go ahead and zoom in here. Let's go ahead and measure this just to make sure it's uniform with the SPY retracement. And it's pretty close to the 50. So we're going to go ahead and say that it's in line with the SPY. Now, the only thing that's making me doubt that we may go higher is that right now we've gotten a candlestick that has opened where we closed. The fact that we have a candlestick that's open where we closed means we might continue a little lower on the micro E minis. Okay, that doesn't mean tomorrow. I mean, even if we go lower now, like retest the 50 or close to it, because there's a price level here too at 63.74 that sets as support. So we can come down, test that, and then go higher. But you'll never see this in the SPY because it's not after hours for that chart. Okay, micro E minis is the only thing you can trade after hours for the S&P 500. Yeah. So micro E minis showing me that we're gonna come down, probably retest this 63.75 or maybe 63.80. Yeah, it's hard to say how low we can go, but if we do break this 50% or 61.8% fib, then as far as that C leg extending higher, it's probably not going to happen. We're going to continue lower, and we're going to look to break the 62.25 level. I thought it said 62.40. Yeah, 62.40. I'm going to put that number up there because that will be where a sell-off trigger will happen, or a trigger for a sell-off. So 63.40. And I'm going to put a price level there. $62.50. I mean, yeah. Okay, so $62.50. Boy, I can't get these numbers right. $62.50. There we go. All right. So, one more thing I wanted to show on this one is a little trick on triangles. Sometimes they're hard to identify because an A down, B, C, let me go ahead and label it. Sometimes the triangles are labeled in 5 swings, and very difficult to measure, very difficult to anticipate. And this is going to be a lower degree, so I'm just going to make it a lowercase. That's your A here, your B. Try not to get in the way of the wicks here. And then the D was way up here. E broke out again down here. So this is the E, this is your D, going backwards here. This is C, B, and A. All right. Now, most of you, if you study triangles, you know the trend lines, more or less, they line up pretty well. But I've noticed in the past few months they don't. There's some kind of different, similarities, but there is a swing that swings out there to throw you off. Now, granted, this is a new wave theory count that I've implemented. Okay, it's from Elliott wave theory. I just don't count the 5 waves, 3 waves corrections. I just find your ABCs and I find pivots that caused trend changes. All right, but I'm not going to get into that right now. This is just a little trick here on these triangles. All right, so basically you just need the 2 points to connect. All right, and this is how you're going to check to see if maybe the triangle is actually a triangle. You draw your line, take it, start where A ended, and you try to see if it was used as a support as the B and the D leg were made. And you can see here this was a hit here, a hit here, a hit here. Obviously it's more than all you need are 2 or 3 points to kind of confirm its significance. And we had 1, 2, 3, I'll count that one, that's 5. This one's pretty close, 6, 7, maybe 8 right here. I mean, I'm splitting hairs on these, but you can see that it was definitely a distinct line right here. So that is uniform to show that it was it played a part in the triangle, is what I'm trying to say. So yeah, I'm gonna go ahead and label this as an A and a B. This was a triangle. All right, so that's why I'm looking for a little bit bigger C leg extended to the upside. All right, so through the night I'm expecting this to come down, retest here, and then we move to our first target of 65.62. Okay, let me just double check, make sure I got. Let me get rid of this real quick. Sometimes I draw in so many fibs I forget which ones we're looking at. Yeah, that was right. So first target right here. And then this would be the second target, and so on. I'm not going to label all of them. But obviously, as you get higher in the fibs, those are going to be your next targets. So I'll scroll down a little bit so you can see the rest of the targets. The next one's 161 at 6664. The next one's 200 at 6764. So see, what else am I missing? Let me bring this A down, clean it up. I was gonna do the US dollar, Japanese yen, but I don't have time. I'll have to get to that tomorrow. So, and then we're gonna look to make a bigger A degree. Oops. That should be up here somewhere. Okay. That's about it. I hope that helps, and yeah, until next time.